There is a huge labor strike that's about to unfold and completely bend over the U.S. economy. What's up, apes? Welcome back to another edition of the 𝗙𝗟𝗡𝗚's Daily Podcast of the Day. Thank you all for joining us here once again on this beautiful Monday. It is September 30th, 2024. Appreciate you all joining us here on your absolute favorite podcast in the entire world. You could have been anywhere else in the world for the next 20 minutes or so, but you're going to spend it with me, and you're going to want to because some pretty interesting stuff going on in the world here today. There is a huge labor strike that's about to unfold and completely bend over the U.S. economy. Meanwhile, speaking of being bent over, Twitter, X, Elon Musk's social media app, 𝗥𝗢𝗟𝗘𝗗𝗏, is also getting bent over by Fidelity specifically. Now, we've seen a couple updates to its valuation, but this was easily the most hefty valuation haircut that the firm has received since going public, and what's arguably the worst leverage buyout in the history of capitalism, potentially. So, a lot of interesting stuff going on today. Let's go ahead and start off with some of the big market movers. So, WSO Alpha portfolio. This is our proprietary long-term trading portfolio over here from the apes at WSO Alpha. We were down about 11 basis points on the session here today. Kind of a rough day for us. It was a rough day for most markets through to about 2:30 p.m. Eastern Standard Time. But then J-Powell got up there and started fucking running his mouth as he always does. He didn't say anything of consequence whatsoever. The market still took it as a reason to hit the nitrous and shoot to the moon. So we had the S&P 500 finish the day up 42 basis points. The NASDAQ was up 38 basis points. The Russell 2000 up 25 basis points. And the Dow, not that anybody cares, was up 4 basis points. Please do not care about the Dow whatsoever. It's tough to outperform when Apple is the top performer in the WSO Alpha portfolio because it is where technically we would be underweight compared to the S&P 500, even though it is one of our larger positions because it's huge in the S&P 500. So Apple shares were up about 2.3% for the session today. And so them leading the S&P and the NASDAQ just kind of makes them outperform the WSO Alpha portfolio. It's not really even much of a competition at that point. But why are sales up so much, or shares up so much? Reportedly drops out of OpenAI funding round, and that was a good thing. So Apple is no longer looking to be one of the investors in OpenAI. That's a little bit strange. I mean, I could see an argument for that being a good decision on Apple's end for investing in OpenAI because they clearly have a partnership with, the new Siri and everything for anybody who's on 18.1, who's not poverty stricken and has an iPhone 15 or 16 like your boy, obviously. Jesus. But either way, it's probably, it could have been a smart idea to, not only foster a relationship, but to get an actual ownership stake to make sure some kind of quality controls, because obviously Apple's big on that. But hey, I guess, the market likes them just kind of staying out of Daddy Microsoft's territory. Okay, let's go ahead and move into some of the banana bits for the day. Like I said, I already covered this one, but Fed Chair J-Powell, he was speaking to the national, some bullshit organization of nerds, I'm sure, somewhere. He basically gave another masterclass in saying absolutely nothing by saying something. He said, basically, there were two things to take away. One, there are more rates to come, but they're not on a standardized or a preset path. Two, do not take the fact that we did a 50 basis point cut as evidence that there will be more larger cuts to come. So that's really the big takeaway. Don't even click on the link right there. You just heard all of the news right there. Secondly, a new AI chip maker just filed to go public. This is called, I believe it's Cerebras. Yes, Cerebras. I hope I'm pronouncing that correctly. But this is a new artificial intelligence chip maker. It's a much younger company than NVIDIA. NVIDIA was founded in 1993. Cerebras was founded this century. I forget exactly which year, but still another, they're going to be competing with NVIDIA in the chip market, but I would say that the competition is more so for investors or for more for that market sentiment. Like, you want to make sure that you're keeping all the attention and the other guy isn't getting any. So this will be an interesting kind of duality of man that they'll show us here. Finally, next. Household debt payments as a percentage of disposable income, we need to stop freaking out about it. It's fallen below 10%. It's back to pre-pandemic levels. So the average American consumer isn't going belly up anytime soon. I think we're going to be breaking down some, building the average American consumer over the next couple of days at some point if there's a quiet day for economics. So if you guys like that idea, let me know. But either way, that could be a good idea going forward. Secondly, imagine being reliant on your absolute brokest friend. Well, you guys don't have any broke friends. I know you guys are all fucking titans of industry out here, building empires for yourselves and your family, so I'm sure you don't have any broke friends. If you do, you should punch them in the face, ditch them, spit on them maybe, never speak to them again, regardless. But imagine being reliant on your brokest friend for your income. Well, that's the case for a record high number of Americans who are relying on Uncle Sam to be able to eat, sleep, shit, fucking have shelter over their heads. So this is kind of an ugly reliance on the government growing across the United States. This isn't a, one-party thing or anything like that. Just trust me, click on that link and you're going to want to read that article. Chinese stocks just had their best day since 2008 to close out last week on Friday. Huge day in the face of, 2 rounds of stimulus coming effectively back to back. So Chinese stocks went absolutely through the moon, had a great day to close the week. Finally, 3 of the top 4 companies with the highest buy ratings in the United States are part of the Mag 7. Can you guess what they are? I'm ready. I'm going to pause for a second before I tell you what they are so that you can think and guess about it. All right, well, if you guessed it was Amazon, NVIDIA, and Microsoft, then you are absolutely correct. Nicely done. Those are 3 of the top 4. The other one in the top 4, which is number 3, you probably never guessed this, but it's GE Aerospace. So pretty interesting list right there, but it's just fucking sell-side analysts sleepwalking into good relationships with the companies that they cover. So maybe take that with a grain of salt. All right, let's go ahead and get into our big story of the day. We were talking about being shipwrecked at port. There's really nothing more disappointing than being shipwrecked at port, but that could be the state of the U.S. economy going forward. We all know that Gen Zers are big on quiet quitting. This is not something that I can necessarily condone for my generation, but still, Gen Z TikTokers huge on quiet quitting, but I'm very pleased to see that the rest of society still has the decency to stick a fat middle finger in their boss's face before they avoid work at all costs. That is exactly what we're seeing from the International Longshoremen Association. This is the largest union of longshoremen in North America, and they're about to go on strike. So, the International Longshoremen Association, what is this? This is a union that was founded back in the early 1900s during the progressive era, the kind of 19 to 1920 Teddy Roosevelt days. So it's been around since then. This is the largest international longshoremen this is the largest union of longshoremen in North America. Now, they basically cover every port from Maine to southern Texas. And there are other ones over on the western portion of the United States that go up into Canada as well. But the International Longshoremen Association, the ILA, which we'll be talking about here today, has 85,000 members, and they are all about to go on strike. So, at least according to the latest reports, this could change literally in a minute. It could change while I'm recording this video. But according to the latest reports that my RSS feed is telling me as of 7:01 p.m. here, they are still planning on going on strike, and the basic reason is because the ILA is demanding a 77% wage increase over the next 6 years. Not only is that the highest wage increase that the union would have ever seen in its history, but it's almost double what their counterpart, the United States Maritime Alliance, is willing to give them. Now, U.S. Maritime Alliance is looking at 40%. That's also what the Great Lakes region of dock workers just got back in 2023. So they're basically saying it's on par with your brotherhood over in the fucking Midwestern states, so they should be okay with a 40% raise. The ILA is going balls to the wall. Not only are they asking for a 77% wage increase, but they're also asking for an outright ban, eternal outright ban on the automation of cranes, gates, and trucks. So basically, they're coming out here and saying, we are demanding the largest wage increase in the history of our union, maybe in the history of any union, because 77%, holy fucking shit, Jesus Christ, you wouldn't even give that to goddamn Joe Mazzulla after the Celtics just won the World Series, and that guy came out of absolutely nowhere. That was a weird pull for an analogy, but still, they are asking for the largest wage increase in the history of their union just at the exact moment that cheaper automated replacements that don't ask for vacation time or, come in late because their kid is sick and can't go to school or something, these are just about to become available for mass production, and the ILA thinks that now is a smart time to start standing on business and ask for wage increases. It's not going well. So basically, the ILA, like I said, North America's largest union of longshoremen. They control the 36 ports that run up and down the East and the Gulf Coast here in the United States. The East and the Gulf Coast in the United States take in approximately 43 to 49% of U.S. imported goods in any given period. Usually this is going to be quantified over the course of a month or so. So this is a huge segment of economic activity here in the United States. A lot of large companies are very, very reliant on their imports as well. We have Walmart, IKEA, Samsung. Poor fucking Bob isn't going to be able to get his discount furniture. LG, Home Depot, Continental Tire. A bunch of companies are going to be completely boned over this, and the worst part is the East Coast and the Gulf Coast. We tend to take in quite a lot of refrigerated agricultural products from the rest of the world on this side of the country. So time is not on their side. Time is not on the side of the importers whatsoever, because say the strike gets resolved on Wednesday of this week, well, there's probably a lot of goods that are perishable and are already past their due date at that point. So due date, whatever the fuck it's called, their death, I forget what the expiration date. There you go. They're probably already past their expiration date at that point. So, you know, it's these importers, it's not a good situation here whatsoever. So Daddy Joey B, Mr. Biden, President Biden, the Biden administration, if you will, has the ability to shut this down with the stroke of a pen. The Taft-Hartley Act of 1947 grants the president the power to suspend a strike for up to 80 days for a quote-unquote cooling off period, basically to force negotiations. The act hasn't been invoked since 2002. President George Bush invoked it at the time against it was actually just the West Coast counterpart of the ILA, because they were all going on strike. It was 22 ports, including the port of Los Angeles, which is the largest in the United States. So we were getting a little fucked back then too, and George Bush did it. Biden considered doing it for the miners' strike back in 2023, but ultimately didn't do it. So we'll see if that changes pace going forward. I mean, the ILA literally has the U.S. economy by the balls, and this is 2 months before, close to 1 month before a presidential election. I would be extremely surprised if Biden doesn't end up having to do something about this, because once again, the workers, they seem like they're not going to settle for less than a 77% wage increase and the outright ban of all automated products whatsoever. Meanwhile, the United Maritime Association, or whatever the hell it's called, they're looking at about a 40% wage increase and no ban on any of this stuff whatsoever. So it seems like the two sides are at exact polar opposites. No negotiations are planned between now and midnight when the strike is supposed to go into effect. So, you know, anything can change between now and the time that you're seeing this. Everything that I said could be moot if they had struck a deal already, but at this point, it's looking a little bit scary. So you saw importers start to load up on a lot of trucks on Friday, but the question is it going to be enough? Now, very interesting situation, and we'll see how it unfolds going forward, especially in an election year. Like, goddamn, that's going to be making the Biden-Harris administration a little bit nervy going into November. But all right, let's go ahead and move on to our big stock movers of the day. Somebody who's not nervy at all is a shareholder of Nikola. Now, every time I see this ticker, I swear to God, I can't believe this company is still in business. Now, the shares are down more than 99% since their founder was arrested in July of 2021, and they're still out here kicking. Like, if that doesn't speak to a resilient business model, I don't know what does. And honestly, I'm impressed. Maybe I should fucking invest. Tell me if I should. Send me an email. Yesterday, Nikola inked a deal with J.B. Hunt. J.B. Hunt, in case you don't know, is one of the largest transportation companies in the United States, and the company is now going to be purchasing 20 Nikola Tray-Fuel hydrogen-powered trucks, helping achieve its goal of reducing carbon emissions by 32% by 2034. That is an awfully specific carbon neutrality goal, or like reduction, like emissions target goal. So that's the only one I actually believe, because most of them are like, oh, 30% by 2030, 50% by 2050. This one doesn't make any sense, so that's why I believe it. 32% by 2034. I fucking love it. So that's it. JB Hunt is buying 20 of their trucks, but the fact that Nikola has customers, I guess, is a big upside surprise to the market, and it certainly was for me as well. Moving on down into our second big mover of the day, we have NIO. Shares opened the day a lot higher, but they closed the day down 2.45%. So kind of makes me look like a fucking idiot, but that's what I get for writing this at like 10:15 yesterday morning. Regardless, NIO shares up 2.45%. Beijing is firing stimulus all across the economy, and that lifted shares last week. But this week, NIO is getting its very own personalized stimulus from quote-unquote strategic investors. So NIO China is the subsidiary for the Chinese market for NIO. And so these strategic investors are dumping about 3.3 billion yuan into NIO China. Meanwhile, NIO Inc., which is the international organization, is investing $10 billion into NIO China as well. They're basically doubling down on the Chinese market, which makes sense given all the restrictions going on from the United States. There's probably going to be some retaliatory measures out of the Chinese side as well. So it makes sense to be investing in this at the time when a lot of competition is going to be falling off. So NIO China is going to raise a total of 13.3 billion yuan from investors. It is going to lose some of its stake in NIO China. It's going to go down from 92.1% to 88.3%, but I guess that's a risk they're willing to take. Once again, shares up 2.45% on the day. Moving on down below into our stinky rotten movers of the day, we have Stellantis. Shares were down 12.52%. If you've ever heard a commercial where they say, come to Chrysler, Jeep, Dodge, Ram 24, this is the company behind that. Stellantis owns all of those brands. Jeep, Dodge, Ram, Chrysler, fucking Maserati, Alfa Romeo, a bunch of these, and then a bunch of like no-name brands that you've probably seen and been like, what the fuck is that kind of car? They're all owned by Stellantis. So the company is completely fucked. We had the same realization that I did about my fantasy team this weekend, to be honest with you, and that is we are both equally fucked. So Stellantis came out here and they said that they are going to be reducing their imports to the United States by 200,000 vehicles for the rest of 2024. Inventory shipments are going to decline to 100,000 vehicles. Now, along with that, profit margin expectations got absolutely hammered, and not in the good way either. They're now sitting in a range of 5.5 to 7%, down from, quote, double digits before. They're blaming global industry dynamics, but smells like bullshit to me, because interest rates are on the way lower, and that should be conducive for a car company, especially because car companies tend to be heavily financed by debt, so that should be beneficial for you. Plus, you look at a competitor like Nikola, who's selling a bunch of fucking trucks, I guess. Tesla's expected to have a very good quarter for its deliveries, and we'll find that out in just a couple of days too. So we'll see in the next couple of days if this is actually global industry dynamics, or if it's back when fucking like Microsoft was blaming price hikes to Office 365 subscriptions on inflation. It's like, Microsoft, give me a fucking break here. So, I guess we'll find out if that's actually the case. And then finally, we have EchoStar. This is probably, I'd be surprised if you heard of this company before. They own Dish TV, or they used to own Dish TV. Shares are down 11.48% today in the most incestuous island of misfit telcos deal I've ever seen in my entire life. Basically, what's happening here is AT&T, EchoStar, Dish, Sling TV, and DirecTV are all having one big orgy, and we're going to see who comes out with who on the other side. So the news started with AT&T. They sold their remaining 70% stake in DirecTV to TPG, private equity company TPG, for $7.6 billion. So TPG is the owner of DirecTV now. That gave DirecTV the cash it needed to go ahead with the purchase of Dish Networks. Now, Dish Networks is owned by EchoStar, so DirecTV is now owner of Dish Networks, and TPG is now the probably fucking freaking out owner of crashing companies like DirecTV and Dish Networks. But the good news is that DirecTV has also taken over ownership of Sling TV. Now, looks like the only thing that all these telecom companies need is actual fucking customers. And that's unfortunately the one thing that they don't have. They got investors out the ass, and they got a bunch of baby boomers that are, either cutting the cord one way or another, I guess is how we'll phrase it today. And I don't think that, there's many Gen Zers that are graduating college with their fucking asking OpenAI, like, hey, how should I watch TV? And OpenAI is definitely not going like, hey, bro, you need a fucking DirecTV subscription. That's the place to be. Like, holy shit, maybe I'm just biased because I was an Xfinity man growing up, but still, that's what we're seeing right now. Finally, last story of the day. God, we're making pretty good time today. Our Thought Banana, we are talking about extreme losses. And I was going to say, it's not really an extreme loss. That was more for the pun, but it actually kind of is an extreme loss. Now, if you had told me that between Elon Musk's business empire, like if I asked you, what's harder, founding the entire electric vehicle industry, putting microchips in people's brains to cure paraplegia and to cure blindness, going to Mars, digging tunnel under Las Vegas, all of that together, is that harder than running a website? I would think, yes, it probably is, but apparently it absolutely is not, at least for Elon Musk. I sounded like the fucking apparently kid there, didn't I? That was a hysterical video, though, so, hopefully that gives us all good memories of when that was going viral. Anyway, what happened? Well, Fidelity is an investor in X Holdings, and I'm sure they fucking regret it. Now, Fidelity, they do come out each month with a monthly holdings report for their blue chip growth portfolio, which is where they hold their exposure to X Holdings as well as XAI. I would have talked about XAI here, but I had already run out of my word count by the time that I thought I was like halfway done, but so we had to cut it down a good bit, so don't get mad at me about that. I'll write about it another day if you guys want me to. Shoot me an email again if that's a topic you want me to talk about. Let me go ahead and put my tinfoil hat on, because clearly Fidelity has fallen victim to the woke mind virus. They're teaming up with the elites to probably make us eat our own pets, and to stop Elon from impregnating Taylor Swift, as he jokingly said he wanted to on X, which I thought was pretty hysterical, even though it was pretty fucked up. Nonetheless, the sick bastards at Fidelity, they came out with their monthly holdings report for the Blue Chip Growth Fund, and once again, they are marking down the value of their shares in X. Now, shares in X in total have been marked down by 78.7% since Fidelity took a stake back in October of 2022 when the acquisition was actually completed. Initially, Fidelity's investment was valued, this is just their equity investment in X Holdings, by the way. So this doesn't have to do with the debt financing that they got in on. They invested a total of $300 million into the firm. $19.66 million was the common equity holding shares that the company had at the time. Now, the value of those common shares, they still own the same amount of shares, they haven't sold at all. They now value their stake at $4.19 million. So again, 78.7% reduction in the on-paper valuation of X. That means from an acquisition price of $44 billion, that means Fidelity is currently valuing X.com at $9.37 billion. That is an absolutely disgusting return right there. Now let me go ahead and look up some of its competitors. So that makes it, smaller than fucking Snapchat. God, that is humiliating. How is that even possible? Who uses Snapchat besides middle schoolers? It's less than half the size of Pinterest, which I'm pretty sure is just where girls go to find wedding rings or something. But either way, it's still, this is horrific. So if we actually look at the numbers, we can see that the average return of the 4 biggest social media stocks, being Meta, Pinterest, Snapchat, and Reddit, have seen an average return of 139.52% since the acquisition went through on October 27, 2022. Now, the reason that is so high is because Meta happened to hit its multi-decade low on October 28th, 2022. So that was their low. They ran up about 475% since then. But still, X is the only one of the group that is actually down during that time. You see, these other ones, they are up like an average of like 18 or so percentage. I think Pinterest might be up like 30%, or maybe that's Snap. And then I had this written down earlier, but I can't find the fucking Excel sheet where I have it now. But still, don't let that average confuse you too much, because it's basically entirely Meta. So the big reason for this is that revenue has absolutely plummeted at Twitter. It was close to $1.6 billion back just a couple of quarters ago, back in Q4 of 2021. Now sub $400 million as of Q2 2024. Now, to be fair, estimates after Q3 of 2022 are all exactly that, estimates, because the company isn't public, so it doesn't have to come out and disclose them anymore. But still, we've seen a major decline in revenues. The company is back to losing money. But the only thing that's going well for them is users. Now, the company is doing a great job of growing users, growing engagement, growing interactions on the platform. What they're not doing very well is monetizing all of that stuff. Now, Musk probably doesn't give a shit about that at all. Now, user growth is up 35% since the end of 2022 from the data that I could find. They set records pretty much every month in terms of total screen time usage, total eyeballs, total interactions, monthly active users, all that stuff. They've been setting records all year. But again, they're not monetizing this well. But like I said, Musk doesn't really give a damn about that. He made it very clear from the get-go that this was not a financial purchase. He's not doing this with the hopes of making more money. He wanted to kind of restore Twitter as the de facto global town square so that people could come on there and say whatever the fuck that they want to say. I don't know who all these people are that are getting this horrifically racist and anti-Semitic stuff in their Twitter feed. Mine is great. Mine is all finance and sports and fucking history and shit like that I'm actually interested in. I love Twitter. I'm on it all day long. I don't see any of that stuff, and maybe that's because I'm tweeting it. No, I'm just kidding. Please don't get mad at me over that one. But still, nobody's paying for X Premium. Nobody's subscribing to other users where Twitter can get a cut of that stuff. Advertisers are bailing out, probably because the CEO of the company literally told their biggest advertiser to go fuck himself in a very public forum, which was pretty awesome if you ask me. But still, things are not going well at X. There's certainly ways that they could turn it around, but we'll see if they actually do. I'm sure that they're going to get creative. Maybe they'll relaunch Vine as a premium product. That would be one way to go about it. Can X become a successful investment? What other monetization strategies could X pursue? Send me your ideas, david@wallstreetoasis.com. I always love seeing you guys' emails. But before I let you go here today, let me leave you with a quote from none other than Elon Musk himself. He said, "When something is important enough, you do it even if the odds are not in your favor." Well, Elon, may the odds be ever in your favor, because it certainly seems like you are going to need it. By the way, shout out to one of you that's hopefully watching or listening to this, Mr. Sebastian, who sent me easily the best email that I've gotten from one of you guys so far. Great idea for a story topic that I'll definitely be writing about in the next couple of days. So I'll be sure to shout out Sebastian when that does come up. But hey, if anybody else has story ideas, if you want to, do anything whatsoever, just shoot me an email. I always love chatting with you guys. So I'll be on the lookout for it. But otherwise, happy investing, happy trading, and bye now.